traders. So since yesterday there's been some developments that are quite interesting. You did have a day of US dollar sort of strength, but you definitely got US some pairs still continuing their trend. So the euro has just broken fresh highs, and you've got the pound following that as well. Didn't really break its high from yesterday yet, but dollar yen had a stellar day in Asia today. It's really showing a lot of support on the DP. I don't know whether this is because of 110 holding a double test, and we're basically now looking for the resistance, maybe towards that 111, 111.50 level. But regardless, you can't fight that price action. So what that means euro yen has reached fresh highs, and really, there's not much resistance above that, right? You've got some, maybe 133 is the target. Yeah, so if dollar yen holds that 110, 114 range, then you've got a lot of upside there as the dollar yen plays around in its range while the euro and the pound like to rally. So this should lead to pound yen having stellar sort of recovery too, and you're seeing that right now, sneaking up actually, sneaking up. Got some big levels, 148, can easily get to that. Stocks at all-time highs, remember. Perhaps that's starting to play its part through to the risk-on appetite, and no one really wanting to be short dollar yen on the US dollar story, with the US dollar already priced out so much in terms of Fed rate hikes. And so while these have got other stories in terms of pound recovery, pound maybe raising rates, ECB tapering, yields rising, you do have the US sort of stabilizing potentially, and the dollar yen be leading the way against that. Now, interesting that the Aussie and the Kiwi and the CAD couldn't go along. You did see reversal in oil, which is why you don't see this oil trade in the in my open trades anymore. Let's have a look at what happened there. Lucky Jim. Let's go to the 1 hour. So we sold and we had a stop at 80.50. Luckily we weren't stopped out on that last little rally above 50, and then we had that nice little reversal yesterday. I've got out at the open here in Asia, and I've I'm happy with that. You sort of get out of jail free card. Nice little profit, taking the returns to around 10%. This was a 50k account, up to nearly 55. So we're doing okay in the last couple of weeks, and just being very selective actually on what I'm in. Usually I'm all into that euro trade, that euro long, euro yen long. I was waiting for a much bigger pullback than we got. I was a bit surprised by the relentless stream of weak US dollars and Fed missing expectations and such. So I didn't get much of that. Now I do like the Aussie long, but that's not great looking, and euro Aussie's rallying, and I might get a deeper pullback in the Aussie. That would be okay. I have gone long Aussie Kiwi. Now this is a divergence play, and I think it's got a lot of merit to it, and I'll quickly run through what it is. It's we are looking at iron ore rallying sharply, and a few consecutive negative dairy auctions, and some weak, very weak New Zealand inflation. And this morning we got some quite weak employment numbers out of New Zealand. So the argument can be made that the forecast quarter-on-quarter change was for 0.7% increase, and it was minus 0.2. Right, so the that was a big miss on the quarter, and the argument can be made that at these levels, the Aussie Kiwis are roaring by, given the yield differentials, which can only get sort of smaller and into the Aussies' favour. Yeah, the likelihood of the RBA raising before the RBNZ is growing by the day, and this should help focus the market's attention on the underlying issue in this pair, which is that it should be trading above 110, given the general relationship between Australia and New Zealand interest rate differentials. So if you draw the interest rate differential chart, it would show something along the lines of that. So there's been this normalization of interest rates, like the yield change between the two countries have gone back to being very small, and that usually indicates a price up around here. And that's a story that the market can grab a hold of. And the RBNZ is much further entrenched in jawboning than the RBA. The RBA has been lightly jawboning. The RBNZ has been aggressively jawboning, and so that could be where the Kiwi gets its negativity from. And you're seeing the Kiwi selling quite aggressively, and the Kiwi can be pushed around, right? And it can be pushed around just alone from the Aussie Kiwi buying. But there's reason enough for the Kiwi to have a correction, and I'd be very worried if I was long Kiwi and hoping that it caught the same sort of bid that it had been enjoying because of the Euro rally. A decoupling between the commodity currencies and the Euro and Pound could be real, and the yield compression story might actually come into play again. So Pound Kiwi's having a stellar day. Nice, nice, nice. And if we're looking at the Euro Kiwi, where are we, Euro Kiwi? Don't have you? Having another stellar day. So it's broken its levels as well. So there's nothing to stop this, guys. There's nothing to stop this apart from some sort of, I don't know, just commodity currency game. So this leads to another trade that's very plausible, and that's just long straight dollar CAD. Yeah, with oil reversing, dollar CAD's vulnerable, broke previous squeeze highs, so the top side's in view. In fact, I'm going to take this trade. I don't mind it at all. Don't mind it at all. And the US dollar can easily have a reversal from up here. Let's put that a little bit off. Okay. And so I don't mind trying to get a part of that squeeze, because it could easily get back to 127, 128 without affecting that downtrend at all. All you'd need really to make it go berserk would be something like gonna be patient, Bank of Canada sort of thing. Yeah. See the effect of the first rate hike. They could go the Fed way, right? The Fed way was like that. Do a rate hike and then pause for a year. So yeah, I mean, you just go with the new trades that are developing, and you know, it's like this point where the market's like, "Whoa, is this something new?" And while they're watching it, yeah, something new happens. So that's where you can get Aussie reversal and Kiwi reversal and CAD reversals, and not really have a new story. But I still think Aussie's going to do better than the Kiwi, right? In that story. But I'm not as keen to buy this dip as I would have been, say, yesterday, talking about the RBA stuff. So I actually closed out some Aussie longs because I'm this is suspect price action. And what the story will be is a yield compression story, that everyone else raising rates and the Kiwi and the Aussie are still far away from doing it, and their relative yield advantage is disappearing. And while it might be true or not true, it doesn't matter. I mean, it's a story that has legs and it can get the market to rally. It's a new story though, and it's not something that's been played very well before. We've had a couple of false starts on it before too, so keep that in the back of your mind. This is one of those false starts not that long ago. Sorry, up here, one of those false starts, and then we came all the way back down. So I'm going to keep an eye on this level, 140, 49 to 150. See what sort of stalling or price action happens there. See if the Aussie can come back to life and get back above 80. Then you might have to just diss that whole Euro Aussie, Euro Kiwi, Euro CAD, Pound Aussie, Pound CAD, Pound Kiwi trades. Because when they reverse, you don't want to be on the other side of those. They move quickly. They move very quickly when they reverse, so you can get yourself into trouble. But you can see that the pound yen and euro yen just sort of indicating that there's something going on here. Dollar index still grinding lower. Probably have to slow down shortly. And it's interesting if we can break that. I mean, a weak NFP will break that. A strong NFP makes the game a little hard. Yeah, I mean, imagine you get a reversal on a strong NFP number and the euro starts going down. That's really going to wreck a lot of things. Dollar yen 113, Aussie dollar back to 78.60. I mean, the market's open to buying US dollars still. It gets a chance after this much selling. But probably just continue to play the current themes, right? And so we'll see how they play out. Very constant grind sort of stuff, which is starts trends, right, guys? But we'll see if that develops into a new game. I'm sure we'll see Analyst come out next week talking about yield compression as the new thing, if it continues and gets more serious. Let's have a look at some of the interesting research I was reading throughout the day. I saw something which caught my attention there. I was on our friend from Brett Donnelly, spot trader from HSBC, put out a little note about the bearishness of the market on the US dollar. And so the dollar sentiment index, daily sentiment index for the dollar, which can range from 0 to 100, currently stands at 6, so it can't get more negative. And the numbers, Bloomberg stories talking about a weak dollar outnumbering strong stories by a margin that has in the past predicted future dollar strength. So when everyone turns dovish or bearish, the market's usually bottoming. Yeah, or well, it's short-term bottoming anyway. So put a little graph there. Got the so this is the amount of negative stories out there. And what am I looking at here? DXY 6-month forward performance. I think there's a shifted graph, guys. So he's saying how there's a delay, but the market is will flip long sooner rather than later, given how negative everyone's gotten. Makes sense though, right? The cycle. You know, I thought it was interesting. So 6 months from now, it's a lagging. So I mean, it's not for today, but it's just keep in the back of your mind that we've got very negative on the US dollar very quickly and very bullish on the euro very quickly. While it has reasons behind it, you know, the market's generally not that easy. In terms of some of the data that came out in the last 24 hours. So yeah, the QE tumbled, oil reversed. You got the oil inventories coming out tonight from the US. You also got the ADP, employment change. The private API report showed a build. The forecast for tonight's government crude oil inventories is for a draw. So that number is extremely volatile. But at this point in time, if you got another build in the government one, and then, you know, it can swing 5-6 million easy build to draw. So the build is where there's more supply than expected. Then you could easily see the oil have a bigger tumble after failing at its levels. Yeah. So that's tonight. But first off the rank is that in just 2.5 hours is the ADP report. Now the ADP report is linked to the NFP via its ability to goalpost the market's expectations for the NFP. So while the statisticians and stats guys will look at it and say there's no correlation between the numbers, blah blah blah, right? It doesn't matter about that. It sets the tone. A strong number here, where the US dollar is getting beaten up, would be enough to potentially start a move in expectation of a strong number on Friday. And you know, the damage can be done. You're looking for a reason to buy the US dollar. You look at for stuff like this. This is a high impact announcement given the market's willingness to look for any good news. And you don't then in the 2 days going forward, you don't try and press the strength of the US dollar pushback, right? It's much more dangerous to buy a euro dip on a very strong ADP number into the NFP in the next 48 hours. So the buyers, the natural aggression of the buyers will be dampened on a strong ADP number because the actual number's coming. Yeah, you get a warning shot, the market gets a little freaked out, takes some profits, leads into a little bit of a pullback, and then that little rally, whatever you get, you know, resumption, the dip buyers probably aren't going to be as aggressive as you would get in a week where you don't have an NFP number coming out and you get another piece of strong US data that's a bit more short-term in its nature. So this, for me anyway, and I've traded ADP and NFP a lot, and you'll see me again this Friday trading NFP live, is an important part of the little puzzle. It's the pre-game. Yeah, we get the pre-game, and how I'm going to set up my trades for Friday very much impacted by what this number happens and the price action afterwards. Sort of trying to read the tea leaves of how committed to selling the US dollar the market is. And we're usually either playing the euro or dollar yen when we come to NFP. And so I would hope the I don't want the dollar yen to be 111.50 as we go into the NFP, because that's a much harder number level to trade. If it's at 110, yeah, nice. At 112.50, relatively easy, looking for the weakness number to get back into the downtrend. But if it's 111.50, it's a bit more even which way we go. So yeah, the two trades I've got going at the moment: long Aussie Kiwi, long dollar CAD. Watching this ADP report tonight, seeing if there's also a little side note. Another reason to be long Aussie Kiwi is a huge jump in building approvals in Australia. 10.9% jump after a forecast of 1.5%. Alright, HSBC is a little bit bearish on a lot of those pairs, right? Remember, they're pretty bearish on the pound, they're pretty bearish on the dollar yen. Now they come out with a little sell on the Aussie dollar. Okay. CFA, Tom Nash. RBA did not validate the FX market for hawkishness and have left the Aussie vulnerable. Okay, here we go. What, a delayed reaction to the RBA? Recently argued Aussie and Kiwi have rallied a lot more than would have been suggested by the movement in the rates markets. Okay, decoupling from the rates markets, going to come back to reality, blah blah blah. In other words, it appears FX markets will hawkish stance effect was not there. Okay. RBA's warned about the negative consequences of stronger Aussie. The RBA's language on currency is more explicit, stating I appreciate it. There's little reason to buy Aussie. So perhaps he's also playing the US dollar's fallen too fast. I mean, this is more a sell the Aussie. If you're gonna sell the Aussie, I think you really think like I want to temper you how bearish it is, right? I think the market would fall into a range from 77, 60 to 80 in the current market with the euro rallying. I don't think there's going to be a complete decoupling between US dollar strength and weakness and the main direction of the Aussie. But yeah, this is topish action, right? Can't deny that. Let's see which one looks more toppy on the daily. Jeez, I think I'd have to go with the Aussie, looking worse. What do you want to be selling into, off that or that? I suppose that's a bigger candle. Anyway, we're long Aussie Kiwi on the fundamental, not the majors. But keep an eye on the majors, right? You got to do that. And the other thing that's just ridiculous is the stock market being so strong, given the reasons for the Fed not raising rates. It should suggest the market's slowing down. Look, I'm not going to get into talking about this stock market because it's just going to upset me. And look, basically we'll come back to trading stocks when they start behaving reasonably. For me, it's well off into la la land right now, and this is, while it has an impact on a euro yen, pound yen, dollar yen sort of stance. Apart from that, I'm just I don't fully understand why it is so strong when there's so much risk out there, potential huge events coming, given the sort of collision course that US and China's on now. I think just a matter of time before the market starts to believe or price in that Trump can't get past a tax plan, and I think that's sooner rather than later. He can't pass Obamacare repeal. He definitely can't pass an aggressive tax plan. But we'll see. But yeah, I'm really cautious. I mean, a lot of people are short stocks looking for it. The one way I would suggest that you go short the stock market is via long the VIX. That's a much better proposition. So the VIX is sort of related to the price of protection on the S&P 500, and I don't have it on my MT4. Otherwise, I would show you what I meant by the VIX. Yeah, I don't know it. I might have a look at it on Friday with you guys on the main platform. But yeah, the VIX is a good way of getting long without the risk of the markets having a melt up, just a relentless rally and blowing off the top. You don't want to be short 2200, 22,000 and it gets to 22,500 and then it falls, right? If you buy the VIX, you won't lose that much. But we'll get more into that. I just don't want to get into that. I've had that conversation 6 or 7 times today, so it's not what I'm looking for. But yeah, so surprisingly bullish euro and the pound, given there's every reason for it to settle down. Let's see what happens post the ADP, and we can read a little bit into that, and then come Friday when we do the prep session before the NFP, be here half an hour before the NFP number comes out. We'll talk about which way to play it. So far it looks like dollar yen's held, so you don't get fireworks in the US dollar market. The very interesting price action in the Kiwi and the Aussie and the CAD suggests there's corrections coming in those three. And so you could either go long, short Kiwi is fine as well. Short Kiwi is definitely fine, and you can go long Aussie Kiwi if you think there's a play there, or you can go long dollar CAD if you think that it's going to be the most hit in any reversal, as it had the biggest gains, right? Yeah, the VIX is ultra low right now. Let's bring up the chart there that Subnode just put up. So this is ridiculously low, actually, guys. Like, ridiculous. So you buy if the market crashes, it goes to 15, 20. Yeah, so you double your money. Literally double your money, and it's never been below 10. Of this particular. Yeah, so you've got that protection, guys. You've got that protection. That it's traded at $1,000 a point, so that's pretty hectic. But you can trade less than that. But you're risking 1,000 to 2,000 max to make 5,000 to 10,000, and it's just when it happens, not if the stock's ever going to fall again. Stocks always have, and you're selling at all-time high. You're looking for a reversal at all-time highs, so it's definitely possible. terms of the UK data as well, there was a weak PMI number from construction PMI. That was the sort of the least important of the PMI numbers. So let's probably not trade that. But surprisingly strong in the face of that as well. Alright guys, well good luck with your trading. If you want me to look at particular pairs, just send me a PM and I'll look at them. I think a lot of pairs are in play now. You're seeing some moves on all the crosses. So not just the Euro Yen, Pound Yen and Dollar Yens, you got that Euro Aussie, Euro Kiwi, Euro CAD, and the Pound equivalents. You know, they're all starting to make some nice moves to the top side. So that's we'll check in on those on Friday night as well. Best of luck, trade safe guys.